Showtime. What's up, guys? Welcome back to another episode of the No Money But Dreams podcast or NFT series or crypto or whatever. Just a space where we're going to talk about the craziness which has just taken place. We have yours truly, Bashir, on the line here. How you doing, buddy? What time is it over there?
My man, it is midnight here in the glorious land of Down Under in Australia. And my brother, I probably will not be getting any sleep tonight. Put it to you that way.
And why is that, man?
What
the hell has happened in the past 24 hours, my man?
You guys have the absolute fucking picture perfect podcast name for exactly what's happening in the crypto markets right now. There's no money but dreams left in this particular market. There's nothing. There's just hopes and dreams. That's all that's left.
Just opium, copious amounts of opium, bro.
And there's no money. Well, look, to kind of put the jokes aside, it is really unfortunate. Essentially, what we've seen is a cryptocurrency token by the name of Luna, and the ecosystem in which
I'm gonna pull up your screen here.
Yeah,
so
definitely.
Take a look at what's going on.
So we're looking at Bitcoin right now, but I'll bring up the Luna chart just so we know what we're talking about. And this is the savagery that we are discussing.
Have you ever in your time in trading ever seen anything like this?
Yes, my friend, I've been trading for close to a decade. I have never seen a chart like this. I've seen collapses before, but the rate of the collapse is what I'm referring to is beyond me. I mean, in just a few days alone, this asset, or whatever you want to call it, this token, went from 88 down to a low of, call it 80 cents, was down 99% in, let's call it less than 20 days, less than 18 days, right? The rate of collapse that has never been ever seen in my trading career. Anyways, to explain as to why this is happening, for a lot of the audience that is very new to crypto is going to be very overwhelming. But to keep it as simple as possible, essentially what's happened is Luna is the governance token which looks after the Terra ecosystem. The Terra ecosystem is what issues a algorithmic stablecoin called UST, which attempts to hold its value and peg its value against the US dollar, the almighty US dollar. Whereas if we look at the UST chart now compared to the US dollar, give me uno momento, right? This is what it looks like now. Can you see that?
Yep.
That is
not less than a US dollar. So it's completely the opposite of what it was created to do.
Yes, and so this losing its peg is something that a lot of really smart people in the crypto ecosystem have been calling for a long time.
Have they been calling to lose the peg only with algorithmic stable coins? Because there is a difference. Some stable coins are actually backed by fiat in a bank account, so they claim. And then these new set of stable coins which have come onto the market and obviously had quite a large adoption, especially the UST coin, which I believe had a market cap, you were saying, of 30 billion.
Yeah, Luna had a market cap of 30 billion. It's now closer to, I think, I don't know, I think it's like closer to 1 billion now in terms of where it's at now. So completely eviscerated.
29 billion has been wiped off essentially in 48 hours.
Yeah, like 99% of its market cap is gone. Like just evaporated. Anyways, the reason behind this is essentially they issue this UST token, which is issued by minting or redeeming Luna. And by redeeming Luna, you mint UST. So 1 Luna will get you 1 UST if 1 Luna is worth $1. If 1 Luna token is worth $50, it mints you 50 UST tokens. Now, the reason why this can become very dangerous is it can create something called a death spiral. And the way that works, and to kind of discourage or prevent that from happening, they built a protocol called Anchor Protocol, which is built on top of the Luna ecosystem. You'll have other DeFi protocols built on Ethereum like Aave, but they provide and offer more sustainable yields, only like a couple of percent, which is something you'd be similar to seeing with your traditional bank down the road. Maybe they'd be offering it a little bit more higher rate. The bank down the road might be only offering you 0.5% or less. But back to the point is that they're offering 20% on this DeFi protocol, which you can consider it being like a bank. And the last thing you want in an instance of uncertainty or instability is you don't want a bank run. You want people holding their funds with you to shore up your ecosystem, to shore up your, you can think of it as a digital bank, right? But what happens is that you get Luna token being $120, so it's minting 120 UST per time you redeem one Luna token. But if the market cap or the market price of Luna falls down, there's now all of this circulating UST that doesn't have a corresponding claim on Luna because the market price of Luna is now $80. And so it creates this instability in the algo stablecoin on UST. So to prevent this instability, they try to have people lock up their UST on their anchor protocol, which is offering this really high yield. But what happens is that when the yield is no longer there, or people are withdrawing their UST and wanting to redeem it for US dollars or redeem it back for Luna, but there isn't that counter claim because there's not enough actual UST in supply. It's just paper UST. It just makes the peg lose its value. Luna collapses, and then what happens is that it enters into this vicious death spiral as people begin redeeming and selling and redeeming and selling and withdrawing out of the DeFi protocol. And then the fear kicks in where people who aren't even doing any of this more fancy DeFi stuff get caught up in the crosshairs and think, shit, I need to just sell my Luna. And then Bitcoin is used to shore up some of UST's reserves. And so then they sell their Bitcoin that they have in reserves in order to provide funds and stability to move back to the peg. But they couldn't do that because even though they had sold all of their Bitcoin and Bitcoin went below 30K, it didn't provide the amount of liquidity that they needed to shore up or bring enough confidence back into the market and restore the peg back to $1 for one UST. And so it just, then the wider crypto market collapses, then people continue to sell it off, and it just becomes more and more and more vicious. And so what we're seeing here, and this is on the daily, if we look on the hourly, we're just seeing some like ridiculous price movements, right? So off the low that it just posted up only just 2 hours ago, probably just before we started speaking, Alex, Luna is now up 545% in the last 2 hours. We're seeing stuff that just doesn't make sense right now, right? So if you bought Luna 2 hours ago, you'd be up 540% as we speak right now, right? But in context, over the last day, from where it was just like 2 days ago, it's now like from where it was 2 days ago, it's down now. Like it's still from where it is 2 days ago, it's still down 92% from where it was 2 days ago. Yet you'd still be up 540% if you bought like around the lows that we had just posted up now. You know, if you bought Luna sub $1.
And what does that mean, having such massive market movements, in your opinion? Obviously, on the way down, you're 90, on the way up, 500. How would you translate that into layman's terms?
Be really, really fucking safe when you're trading, right? If you are going to use leverage, don't, right? Unless you really know what you're doing. And if you're going to just be dabbling in spot prices and, you know, just getting some exposure and withdrawing it into your own crypto wallet, you really need to only afford what you can genuinely, only invest what you can genuinely afford to lose, because a lot of people don't have the stomach to handle that kind of volatility. It's not something that we as human beings are trained, like we're very simple monkeys, right? We're not a very evolved species. So we see prices like this and we see volatility like this, and it's only natural to capitulate at the lows and then FOMO buy back in. Right now it's pumping back to $5. You FOMO buy back into $5, and then before you know it, is back below $1 again, and you're panic selling. And so my advice is to anybody who's watching this video is just be really careful Like only do this if you know what you're doing. And if you don't know what you're doing, which is 99.9% of people out there, and I'm not trying to discourage people from investing, by all means do it. It is a fantastic thing to do. But get into things like Bitcoin and Ethereum, get used to the ecosystem, maybe place a few trades on a demo account so you're not actually having to risk huge amounts of capital. You can just have a play and feel that thrill and that exhilaration without having to put your capital at risk. And then once you've got yourself trained up and learned on a demo account, then you can graduate to a live account with very small amounts of money. And then after that, then you can start graduating to larger and larger accounts. But this is like this is more of like a 2-3 year tuition process, not an overnight thing. But what this volatility teaches us, it teaches us how to be sharp, switched on, intelligent, sophisticated traders by managing our risk, by paying attention to the news. And by the news, I mean spending time on Twitter, by staying informed, not getting that FOMO, having conversations like this, like me and you, Alex, actually helps me, calm my ideas and calm my my eagerness to place a trade and actually only place the trades that I should be placing.
Definitely. And you had shown me earlier something on Twitter where somebody had actually kind of foreseen this whole thing take place last November. I was quite interested that he had gone through each individual step. I think that's kind of what brings so much excitement, positive and negative excitement, into the crypto spaces, that Twitter is basically this town hall platform where people can express all their ideas. And who even knows if he was involved or had knowledge, or it was sort of like an insider trading situation.
So I agree. I mean, there's a character here called GCR, right, who is incredibly intelligent and has been in the crypto space for a really long period of time, worth following if you want to, think about markets and think about trading. He talks about it in quite a big way. And so essentially he was quite bearish on Luna because he felt that the ecosystem wasn't built in a way that is sustainable and the way it should work. But I'll show you as well, there's another gentleman who pretty much broke down the entire way it was going to work. And this gentleman's name is Freddie Reynolds. It's a pseudonymous name, so it's not his actual name. And he broke down how to actually break Luna to zero. And this was back in 26th of November last year, 2021. And he literally broke it down. But he just said the only thing that was needed is approximately $1 billion worth of capital to create a break the bank type situation that George Soros did with the Bank of England back in the day. He did that, and you need a fair bit of money to do something like that. And so he pretty much broke down step by step exactly how a break in the ecosystem would work and what exact things would need to happen for it to become a death spiral to zero. And if we look at the chart, we got very close to it. We put in a low at just shy of 70 cents. But yeah, the market behavior that we're witnessing now is very irrational. And so even as we're talking right now, my man, it's up 690% off the lows.
Almost
almost up 700% off the lows. And now just this candle, whilst we've been chatting, on the hour is up 105%. Like I got to anyways, back to Twitter, and I'll move back to the charts in a second. Yeah, there's plenty of free resources that you guys can go through and learn from whilst you're developing your understanding of this very, very wild ecosystem that is getting that to this day still amazes me, and I will continue to fall in love with, and I love it so much. But if I was to just jump back into the charts, I would just say, just be really smart when you are placing your orders in the market. What you want to do is you actually want to have some sort of strategy or some sort of reason as to why you're entering a long or why you're entering a short. If you're just kind of like, oh shit, I need to buy, shit, I need to sell, like, oh my God, it's up, it's down, it's up, it's down, you're going to give yourself like a heart attack. Just stay chill and just place the trades that actually make sense to you, and that you can actually say, okay, well, if it goes completely against me and it goes to zero, can I afford my rent or my mortgage the next month, right? So just keep it chill, because I can tell you now, opportunities like this will continue to come again, right? And whilst you're putting in the hard yards now and you're learning how to trade in a really savage bear market over the next couple of years, that when the bull market comes back, because bull market is easy mode, right? It's easy mode for trading. You just get long and strong, and you long your longs and you long again, and you just print money, right? But in a bear market, as savage and as volatile as it is, you need to really have your wits about you. But if you get trained up in a bear market, you do much better in a bull market.
Awesome, man. Thank you very much for the breakdown of the whole Luna situation, which is taking place, and some key tips on how to trade. Hopefully, we'll catch up again soon, my brother.
My man, I wish I could have shared more, but hopefully the audience can walk away and actually go ahead and do some research into this, because it's absolutely brilliant and fascinating. And just what I was able to do is just condense it real tight. But there's so much more to unpack. But you guys need to do that in your own time.
Thank you very much, Bashir. Take it easy.
My man, peace.
Bye.
Take care.